Welcome back. Tega's core expertise lies in designing, manufacturing and distributing rubber mill liners, which has made Tega the choice supplier for global mineral and mining companies. Sumaira Abdi caught up with Hemant Vora of ICICI Securities to get his insights on what made Tega Industries a success story.
You know, this week we're talking about Tega Industries. So if you see their story, it almost sounds like to hell and back. You know, at one point they even were close to going bankrupt, right? So as an investor, what does a story like this actually mean to you? I mean, would you put more money because of the perseverance of the promoters, or do you think this was just a tough business for them to crack into? I mean, what's your analysis of the last 20 years of their business?
I think you used a wonderful word out there, perseverance. I mean, if you look at the history of the company, Mr. Mohanka actually was going through a journal on mining, and he read an article on how minings are done globally, and Tega is a company that he came across in that journal, and after reading about it and doing some more research on it, he found the company to be very interesting and the kind of products they are doing. 71 to almost about 2 to 3 years time, he kept chasing the company, went and met them a couple of times, engaged more with them. And way back in 1976, he actually formed a joint venture with the company. I mean, those were the early days as far as India M&A and joint ventures are concerned. So in 1976, he formed a joint venture with this company, typically to look into this. So I think, the passion, the drive, the interest in the business comes right from that early age. So, and every business will see its own cycles in terms of up and down. But the way Mr. Mohanka has actually stayed with the company and stayed with the passion for all long has actually paid off well for him. And we are actually seeing that how it has turned around completely in the last few years, and come out as a second largest company in the world. I mean, that's commendable for him.
Yeah, and it's not just, that he stuck on or he didn't lose heart, but he also came up with a differentiated product line and the industry, right? So is that what also attracts you to a person like Mr. Mohanka?
Very clearly. I think what he maintained, his focus is on 3 technologies, which are very important for this industry. One is the mechanical, second is the grinding, and third is rubber. I think he kept his eyes and focus very clearly on these 3 things. One of the first guys to actually come down and talk to Indian mining companies and tell them that, hey, look, let's move from the traditional steel stroke metal grinding systems to these rubber grinding systems. That's a big shift which has happened. And thankfully, that's actually, as I was mentioning earlier, that's actually proved well for him. And he has been able to convince the Indian companies as well to go through that technology. Yeah.
And you said, right, that they're the second largest player in the world now in this space. How does one actually become a global player? I mean, what is it that propelled this industry, as opposed to any other, and made them the world number 2?
I think the way they looked at this business is that mining typically, while India does mining, but most of the mining happens in the other parts of the world. So very clearly Australia, Chile, some of these other geographies which they clearly focused on. And what they did, they adopted a 2-pronged strategy. One is how to enter that market, number 1, and how to get the customers in that market, very clearly. And the technology, the know-how, the process, everything will come along with that. So very, very focused inorganic strategy they had in mind. And in the process, they actually went ahead and acquired 2 companies, one in Chile and one in Australia, right from the time that 2011, when they started off looking more into the global markets. And these 2 acquisitions have proved phenomenally well for them. And today, they've continued with the name. They have the customers in place, they have the distribution network in place. They also ensure that the inventory and the process know-how, everything continues out there, which helps them to kind of, cater to the needs of the export market.
Sounds like it's been a busy 20 years, right? Maybe that's why he didn't have time to think for an IPO. But is that something that you would advise him to list?
I think so. I think so, very clearly. Maybe, but I only feel that, maybe it's about a couple of years away from today. He still has a little more, juice left before he goes into the IPO stage. A few acquisitions that currently the company is looking at exploring. I think if they click in the right direction, then I think it will be a very good story. But overall, I think it's a great IPO story to look at.
Okay, so let's go back now to their inorganic activity, because you spoke about the kind of acquisitions that they have in the works and the ones that they've done already. A, what do you think of their style of M&A? And B, do you think it might be easier for them to continue with this style of working post-listing?
I think, see, the way they have looked at the acquisitions, again, is very, very selectively, very, very selectively. So they have gone ahead to companies and they have approached companies only when they believe that, this is something which is going to add value to it. Okay, every single deal they look at very, very cautiously. 2008, 2009 was a period, just before the Lehman crisis was a period when Indian companies were going all out. Okay, they were acquiring companies left, right and center. And at that stage also they had enough opportunities on the plate to look at. But they were very, very cautious. In fact, it was 2011 when they did one of the big acquisitions, $35 million in Chile. And post that, another acquisition in Australia, a smaller size. And even after that, they had a few more opportunities, but they didn't do it because of obvious reasons. It didn't add so much value as it is required. So even going forward, once the IPO happens, I think whatever helps the company and it's in the benefit of the company in the inorganic way, they would definitely be open to look at. Because aim is to reach, if not number one, at least close to number one, okay, as close as possible, and to expand the product portfolio. So whatever can add in the product portfolio, they would be more than happy to look at that.
Yeah, there's one of those famous brand sayings which says it's the number two always tries harder. Yeah. So I guess that's where Tega finds themselves. Yeah. But listening to the management, we heard them say that they're targeting about $500 million in terms of turnover over the next few years. What do you think will be the key triggers that will take them to this $500 million mark?
I think it's a very aggressive target that they have kept for themselves. $500 million in the next 3 years is definitely quite aggressive. But the key things that they would continue to focus on and they would want to continue to focus on is how the Indian market revives. Okay, and they are definitely working on that, talking to people. And globally, whatever acquisitions they have done, how best they can achieve, the best out of it. And look at other geographies, entering new markets. So there's a three-pronged strategy as far as market is concerned. And parallel on the product and technology to see that how they can expand the fleet of product. So I think as a combination of the market and combination of the product, I think that's the best solution for them to see how they can achieve this target.
All right, touche to that and all the very best.
Thank you.
Hemant, thanks very much for joining in.
Thank you so much.
Well, that was Hemant Borat's analysis of the company. On that note, it's time for another short break. When we come back, we look at the road ahead for Tega Industries. Stay tuned.